Hello my brilliant home buyers and sellers, this is Faryal, your real estate agent, and in today's video we will talk about what everyone in Canada is so obsessed with right now and focused on, which is the Bank of Canada interest rate cuts. That was just announced on October 23rd, and there was a cut by 50 basis points. Now it seems like we as Canadians are probably one of the only country that is so obsessed with Bank of Canada and the interest rates. So what does this drop actually means for our real estate market? We will touch on what it means for our average home prices and home affordability, and what does it really look like for you as a home buyer and a home seller. So let's get right into it. First, let's talk about what does it mean for you as a home buyer and a home seller. What it means and what it can look like is that we can see more buyers now enter into the market because they might be able to afford a little bit more, or their monthly payments might be a little bit better. That can encourage them to enter into the market, which can translate into more sales, of course, more activity in the market. And for sellers, that could look like that they have more buyers coming into their properties, more showings, and their home can move a little bit faster. More buyers coming in, seeing their property means that they can get offered sooner than later. Their time on the market can get reduced. But it can be a slippery slope as well, because all this news and media can portray for sellers that they can assume that this cut will increase their average home prices right away. And this could also mean that sellers might want to not accept certain offers, thinking that they can get better offer later. There's so much information out there that can easily be misinterpreted. So now I'm here to bring you some facts and some numbers and some market trends from last 6 months to really show you what's going on in the market. So let's take a look at the graphs that I've created for you. I've created two charts over here. Number one is housing supply for last 6 months for each home type throughout the GTA, and to see what the supply is looking like in the last 6 months. And number two is the active listing, to see how many active listings have we seen and what the trend is showing us from past 6 months. Before I go and start showing you the graphs of the housing supply and active market trends, I first want to explain to you something called months of inventory. I think it's one of the most important data that you could use to determine what the home prices will look like, and especially for home sellers if they are looking to sell their home and price their home. This data can definitely help. So what months of inventory is all about is that if today nothing else comes to the market, whatever we have on hand, how long will it take us to sell all the homes that are on the market? So let's say if we have 2 months or less inventory, which means that we are very well in a seller's market. Anything above 2 months, I would say closer to 3 months of inventory, we are more in a balanced market. And if you're seeing months of inventory being 4 months or more, we are very well in the buyer's market. So now let's take a look at the housing supply charts. So in front of me is first the months of inventory for the GTA detached homes. So if we take a look at it, the graph shows us that it has been increasing quite a bit every single month for past 6 months. So we started at over 2 months of inventory, and right now as of September, we're sitting close to 5 months of inventory for detached homes. When you look at the semi-detached home, same trend. They're a bit less than detached homes, of course, but we started at less than 2 months, so we were very well in seller's market for the semi-detached. And then we saw that it has been increasing pretty much every month, and as of September, we're sitting close to 3 months of inventory. Then for freehold townhouse, similar story, started at less than 2 months of inventory in April, and by September, we're sitting just over 4 months of inventory. For the condo townhomes, exactly the same story. We're sitting at over 5 months of inventory when it comes to condos, townhouse as of September. However, we started less than 3 months of inventory in April. When it comes to condo apartments, definitely a lot more inventory than we expected. We were sitting at less than 4 months in April, and every single month we saw an increase. And right now we are sitting close to 7 months throughout the GTA. So looking at this, we know if, let's say, no other houses come to the market in next 3 months, which is not going to happen, of course. But if that's the case, we still have at least close to 5 months of inventory for detached homes, semi close to 3 months, freehold townhomes close to over 4 months, and then we have condo townhomes close to 6 months, and condo apartments close to 7 months. So that shows that our average prices will not skyrocket right away because we have quite a bit, except I would say semi-detached can see an increase more than the others because we don't have that much inventory for it. But overall, we have a good chunk of inventory sitting in the market right now. Now let's take a look at the active listings. When it comes to active listings, the trend is pretty much the same. But we saw that it's been increasing every single month for pretty much every type of home throughout the GTA. So April, we were sitting just over 7,000 active listings. And if you look at every single month, they've been increasing. And as of September, we were sitting at over 11,000 active listings when it comes to detached homes. Of course, that means that homes are not moving that fast. So we can definitely see that the trend is showing us that more and more homes are sitting on the market for longer. But with the interest rates going down, we really have to monitor what this trend will look like in next 3 months. And we are seeing that the homes are moving a lot faster because the interest rate cuts went down, right? So this number will definitely help us to show what the trend will look like in next 3 months. But for now, it shows us that we are going towards the trend that the active listings are a lot higher each month. Same thing with semi-detached, it's been going up. If you look at freehold townhomes, same trend as well. Condo townhomes, same trend. They've been increasing pretty much every month. And condo apartments, the same trend as well. So for now, for sellers, this information is the key. If you are looking to sell your home in the next month or two, definitely keep an eye on these stats because that's what you will have to use to determine where you want to price in order to move your home faster and for a good price as well. Again, if you have more questions about this and if you're wondering what your home will most likely sell for in this market right now, if you decide to sell, feel free to reach out to me. But this is some really good information for you to keep in mind. What does all of this mean? Well, the numbers don't lie and the trends are showing us that we are very well in a buyer's market right now. Sellers have competition, and in order to sell your home successfully, you will definitely have to be very cautious about 2 things. Number 1 is how you present your home in order to stand out in the competition. But number 2, which is very important, is how you're going to price your home in order to drive more traffic into your home. Pricing your home correctly right now that we're in a buyer's market is the key to sell your home in a timely manner. Now let's talk about the affordability. It is very simple. So you can even do this on your own. Let's open up a mortgage calculator and I'm going to enter the numbers for someone who is just entering into the market, someone who is upsizing and someone who is downsizing with the given interest rate and what the savings will look like for you. So let's take a look. So I just opened up my website. You can easily go here for yourselves realestate.ca and you will be able to access the calculators, different calculators. If you are someone who is thinking of buying home for the first time or upsizing it or downsizing it, whatever your scenario is, you can come and play around with these. You have mortgage affordability calculator where you can go here and kind of plug in your numbers before you even reach out to a mortgage broker. You can kind of roughly sit down and do this to see if this is going to be the right move for you or not. You can write down your annual income, the down payment, all those living costs of your future home, debt payments that you have every month. So you can do that. But over here for mortgage loan calculator, you can play around with these numbers and see what your monthly payments will look like. So let's say if you're someone who is looking to buy a $600,000 home for the first time, a 2-bedroom condo, which you can easily find nowadays with the market that we're in, and it will plug in some numbers for you. It will show you what it will look like with less than 10% down, with 10%, 15%, 20%. And then it will give you different rates as well with 25-year amortization. Now, if you go to customize, you can actually change these to variable from fixed 5-year to 4-year, 3-year, whatever your term is looking like. And if let's say you have heard a custom rate that you've given from your mortgage broker or bank you kind of spoke to and they gave you a rough number, you can enter that. So let's say we enter that here over 4.69 just for the fun of it. It will give you all the numbers over here to show you what it will look like. So you can go ahead and play around with this. This is a great tool to use and I always recommend this because This will give you a rough idea as to what it will look like before you even reach out to someone to start looking into buying a home, right? It will show you what the land transfer will look like. If you're a first-time home buyer, you can enter that. It will talk about how it can give you a rebate over here as well. So it's a really good tool. I entered Toronto. You can enter whatever city you like. Let's say Mississauga over here. And then it will show you if you're a first-time home buyer, you do get a land transfer rebate of $4,000 for the first time. Monthly expenses, cash you need to close. It's a great tool to kind of come up with your financial plan and to check your affordability on a monthly basis as well. Now, I've been having conversations with mortgage brokers, with mortgage specialists, with the bank. Just because the interest rates went down, it does not mean that you will not qualify for more amount. I mean, you could, but not necessarily in every case. Every case is different, because don't forget that we still have the stress test, which means that you will have to qualify at a higher rate in order to be approved for a mortgage. But what I'm afraid of at this point is that the media will fuel this rate cut news to a point that will create a FOMO, fear of missing out. And many people will start thinking that they are going to miss out if they do not act right away, even if they're not in the position to act. And that's exactly what happened back in 2020. And look where it got us, right? My only advice over here is that please do not act because of fear or that you will miss out on any opportunity. Don't buy or sell if you're not in the position to do so. You have to keep in mind your monthly affordability has to make sense to you. And just because you're buying a home, it's not just only about the monthly mortgage payments. It's about carrying a big expense that you will have to take care of. There's so many other expenses that come up with owning a home. Day-to-day repairs that come in. Sometimes the roof has to be fixed, the basement is leaking, whatever the case is, you have to go with the mindset that you need to have that kind of money set aside to deal with all of these unexpected expenses that can show up for you. And of course, we're dealing with the uncertainty of the market that can happen, interest rates going up, interest rates going down, and you have to be able to be in the position where you can be able to easily adjust without hurting. So I'm not here to scare anyone. This is not the time to enter the market. That's not what I'm trying to say. I'm just trying to say that everyone's situation is different. Don't get influenced by the media or anyone else who's trying to tell you that this is the time. Please make sure that you sit down with your family, look at your expenses, look at your finances, look at your needs first. And if you are someone who is in the position to make that move and you're ready for it, that's when you pull the trigger. And if you are someone who needs help to navigate the market and don't know where to start from, I'm always here to help. You can simply reach me by clicking the Calendly link below, or simply call me or text me. All of my information is in the description below. Until next time, this is Freyal signing out.